Here we are looking at the top 30 momentum companies on ASX. These are the momentum leaders, the ones that have had the best performance on the market overall. And then we'll move into the launchpad. That's where we identify the next market themes and the next market leaders, the companies themselves. Sneak peek, this week there are a lot of VCPs in there. We do this by looking at the companies that Gary selected. So he's going to pull out the best charts, the ones that have the best setups, the lessons to learn from, and the price action to really dig down and understand. Because as momentum traders, we use studies of the best performing companies, not only to trade, but to make our trading skills better. And if you want to do that at the same time Gary does, click join as a member. You'll get the list. And as our members have done, they'll send through their requests. And at home, as they're going through this video, they're looking at their charts that they've marked up against what Gary says, and it helps that prosperous cycle of improving the trading. So Gary, we've got a lot to look at this week. There's a massive chart, a huge amount of requests, and you said before recording a lot of VCPs. So how are you this week?
Yeah, I know it's sort of, I don't know if it keeps sort of saying this, mate, but it's like it's the hottest market I've seen for a long time. Like I remember I was working for CBA many years ago, ComSec when in the tech booms. That's how old I am. And the market was just on fire. Like it was constantly. I was like, man, this thing's like a bubble. It's kind of burst. So, but it lasted a lot longer than anyone envisaged. But it eventually did burst. So it does feel a bit like that at the moment, but I don't know where we're at. We're sitting in the cycle, whether we're in the I'm not sure if we're in the fifth innings or the eighth innings, but we're definitely down the track here at the moment, and it's pretty hot. So I don't know what your readings are saying, but man, it feels like it's hot, and it's just feels like the smaller names too. I just keep looking at some of these smaller caps as well. They seem to be some in it.
Yeah, they're up massively. And
I don't know what the readings are saying, but I just know some of the smalls that I've seen, even seeing like profiles of like Chinese small caps that have just gone. So it's like, it's incredible. Yeah.
Well, we'll have a look when you share the charts of the small caps, because that's something I was sharing with a couple of traders this week and just going, well, that's amazing. And comparing it to the XJO. But as you mentioned it, so this is the members screen for anyone who isn't familiar with it. The Momentum Profile members get access to this daily report. And I'll zoom in here because what's interesting is that we're in a rare sense of time in that, like you said, you haven't seen this for a while. Well, the market hasn't seen this for a while. For us to have momentum scores as strong as we've had recently, well, it's been pushing out the curve. So we've been all these days here to the right-hand side. If you look at this bottom left-hand chart, all the rare times, the top, the really, really rare ones, we keep pushing out those limits. And we've been doing that in the last couple of weeks, just because the momentum opportunities in that top 30 list are just getting better and better. So we're better than 96% of the days that we've seen in the last 12 or 14 months. And the ones that are above it, well, they're all here. So if you look at this, it's the light blue line, which we're comparing. And then the last one I'll share, which is sort of where we fit in the cycle. This is the probability of finding any company. So forget the ASX 200. Just look at everything that's listed and has enough volume to trade something reasonable. The probability of finding a random company that goes up 10%, it's actually just been getting better and better and better. And just look at that. It's what was good a month ago is now kind of seeming average, because it's just been improving and improving, which we're probably going to see in the list when you share it with us, which is there are a lot of smaller micro caps. And when they run 10%, momentum traders get really happy, those who trade in those spaces. So if you load up your chart in the top momentum line, maybe you could start off with the XSO, so the small cap index, because that's just showing us kind of antithesis what we just looked at in that momentum. We're seeing huge momentum. We're seeing a large participation in that top 30 list of the best momentum leaders being small caps. And the probability of them going up 10% is better than it has been for over a year. So hopefully that's working for you, and Zoom will let you screen share and that'll start kicking through, and everyone should see that very soon. So that small cap, that's just insane. And on
That's the daily. I'll just have a look at the weekly. Yeah. Maybe go a bit further at 10 years. See of it. Yeah, it's just the speed of that move. That's the amazing thing. Yeah, but I mean, look at that, just sort of hugged the 50 whole time. So pretty interesting. I was looking at a couple of stats there, Chris, as well, because I think so the 7 leaders, what they call it, the Mo's 7, the momentum 7.
Okay,
Well, yeah, so the 7 stocks are the most momentum at the moment. They're like 20% away from the 50-day moving average at the moment, but the group. So, yeah, it's pretty phenomenal. But also seeing one thing they are sort of seeing, which I was a bit surprised actually. I didn't realize this was that the percentage of stocks in the S&P 500 below their 50-day moving average has actually been growing. So, as in this, yeah, I think it's sort of peaked around 80% there back in July, and last count there, we're at 55% stocks above the 50-day moving average. So we're saying
500.
yeah. So we're seeing actually a deterioration. So a number of, which is kind of what you should sort of say, because obviously we know that you start to see market breadth issues. So you see fewer and fewer stocks running up, and the leaders do all the heavy lifting at the end. So the heavy lifter, when the 7 leaders, they're the furthest away. They're 20% away from the 50-day moving average, which is massive. So they're pretty extended. The rest of the market actually is breadth issues, is actually deteriorating. So the small caps are probably disguising a bit of that moment, because we're seeing a few small names here driving there. So it's kind of probably helping with some of the rotation stuff there. But
Oh, definitely.
yeah,
And just on that,
yeah,
I completely go with the breadth. Like later in the cycle, the number of companies decreases, the heavy lifting's done by fewer and fewer, then it's more, the market's more fragmented, it's more fragile, it's more prone to falling over, and we've traded those markets before.
yeah.
What I find, so I've done a fair bit of analysis on this breadth as well and tried to cross over with the ASX and just wondered, why do we not follow it? But something that you've mentioned before is that we don't have that many profitable companies on the ASX. Whereas S&P 500, most of them are profitable. Most of them, have good earnings. Whereas we have so many miners that when they start performing well, they start flowing back into the ASX 200 and then dragging down the profitability ratios. And that's why our market breadth, I find it hard to mix over. But we're delving down into the breadth side. We want to talk about the momentum leaders. You've got RAC on the chart there. Is this one of those ones that's more than 20% above the 50-day?
Yeah. So this is I think is number 7 on the list. So this is a bit of a. I did try to buy this one actually. Kind of gapped up too hard on that EP there. So yeah. But yeah, nice little move. And nice with this, this goes to show you sometimes those stocks can look pretty extended. Around that sort of $3 mark there, but the whole thing tightened up. What was the tell there? Was the volume just tightened up, and the volume just really, and holding that 10 too. I mean, that's the Christian Kalinaghi sort of play there, is to just see that, strength there. So stocks that go up 100%, then they tighten up, high tight little flag again, will tighten up, hold the 10-day moving average, bang, so you can still go those again. So I thought that's interesting there, because it's had another little tighten up and then gone again. So yeah, I'm not sure how many drives we normally get like that, Chris, before we're at risk there, but I think we've had that 1, 2, 3, and our 4th drive here, so we're probably getting a little bit risky there now. So
Yeah, when they go vertical like that, it's really hard for them for the 3rd one to do another 100% again. I've probably from a study of just under 400 high tight flags, found that rare.
Yeah,
Not impossible, obviously, afterpays and that kind of thing. Just
I mean, can still go again, but normally we have a period of pause before that, So we're seeing, so maybe some stocks like DroneShield might have had that 4th leg, but then they go through normally through a contractionary or a larger pause, or a bit of a cool off there. But yeah, I thought AVM was sort of one here to watch here, number 10, just because again, a little of that explosive volume. It's too small for me, but then it has pulled back here. Just come back to the 10 here now. So really pretty, maybe 1 day of selling here, pretty wide bar, really could have been a lot bigger than that. And the next couple of days, they're pretty light. I mean, yesterday was pretty light. It's kind of like, okay, that's sort of, these are sort of what we want to see there. So I'd be probably drilling into sort of, I just circled that one to keep an eye on, do a bit more of a search on them, sort of see what they do. So I thought that was sort of interesting. Star Farmer's one that sort of it's kind of an older name, but it's had a pretty good run here, pretty good volume. Has pulled back on some lighter volume, so bit of a watch for me. But the only thing with this one is that I do know the stock's been around a long time, got a lot of overhead, so it's going to make it tough here. I just buy these stocks. I mean, they can still have good runs, don't get me wrong, but when they pull back, they don't tend to hold up as well. They don't get that high and tight or sideways. He just tends to draw in a bit more selling. The corrections seem to be a bit larger. And this makes it a bit tougher though. We want to sort of see them, roosters for losers and tight is for winners, So we want to see that tight contraction there. We're seeing it there. I mean, just look how, if we go back and look at that RSC, look how tight.
Super tight, super high.
Yeah. So stage highs are like, yeah, it's there's not really, they're not looking at massive overhead up here as well. We're pretty much for the last 3 or 4 years, we're above it. Anyone who's bought it the last 3 years is pretty safe. So, whereas, this other one here, Star Farmer there, the last few years, we go back to, in the last, 3 or 4 years, everyone's underwater. So it just means that, I think sometimes when there can be a lot of overhead there, but if I think you've had 2 or 3 years of sort of trading down there, then you're kind of probably washing out a lot of that old, and then maybe you can kind of go after that. So I think sometimes you can overcome that overhead with a bit more time. But I think if you've been around in the last 3 years, the average person's like, down 200 or 300%, I think you're going to find it hard to get headway. G50 I thought was interesting here. Just one to watch there, just because the volume profile's been pretty healthy, Chris. There's been a couple of sell days in here, maybe the peak, and one other day down there, but that kind of exhausted the move. But then the volume's been pretty constant again. So I thought, okay, definitely circle this one here just to keep an eye on. That's sort of, it's had that pretty decent sort of move here, pretty good strength as well, and a pretty good breadth of volume. So it's one that goes on our profile because at some point will have a bit of a congestion, of course. NVA, bit of a VCP in there, sort of that's that, had that drive. I think I mapped out here a little bit longer there. You've had that strong move and then AVC, and then the whole thing starts to tighten up here, and then you get a little B-wave break here, so 34, 35 cents here coming through here, bit of volume coming in as well. That was a pretty good channel there, so that looked all right. That nice move here now. Probably just goes on the watch list again, see if it can have a bit of a pause here. HJS, a pop, a pretty big volume there, sort of come out of not left field here, but just had a few pops there and a few drops as well. So it was probably a bit riskier this one, but just on to watch. ACE, I did see this one, Chris. I watched this little tightening here. I did think about buying some here, but I struggle with liquidity there. I had to get like a 10 or 15,000 share line. I was going to have to go through about 3 or 4 price increments. There's just no shares on issue, so that makes me feel nervous. I don't know. It's weird. I was talking to a trader about it yesterday. I said every time there's no liquidity in the stock, and I have to go through like 3 or 4 price players to get an order, I said, I think it's too hard. I'd say 90% of those have gone back out. And so I'm like, maybe I should just be trading maybe half of half. It's like, I don't know, just maybe some smaller sort of trades there, or, through one of the super funds or something, just smaller. So I don't know. I just noticed that when they're hard to trade there, I just noticed, I reckon it's probably 90% of them are popped up here. So that, see how tight that was, good volume, nice and tight here. So if liquidity was great, this would be the ideal setup there, because then you sort of come out of this pretty strong as well. And then doing pretty
Well,
well.
as you say that, there have been occasional ones where I've traded them like that over the 50 cent, and I've been filled on the day, but the price steps haven't been that great. And it's been okay. I've been able to get my fill. But when it starts running like that, it's brilliant because I might put my profit target in, 5R or 6R or something up. And I look at it and go, well, I'm 6R out. And actually, I'm only 3 price steps away from being filled. And you keep getting jumped, but they're only marginal jumps. So they're helping draw the chart and helping like drag it up higher and higher.
Yeah.
It's a good feeling, but it's a rare one.
Yeah, I know a couple of traders who do trade in the smaller names, and they sort of said, "Oh, it feels like when I buy those sort of breakouts here, I feel like I'm the one triggering the breakout." So, so you're sort of buying, 3-4 cents, and the bang is like, "Oh, I think I've just broken the stock out." So, but no, I can. Yeah, I mean, it's just hard to just you got to be comfortable with what you're trading, liquidity and stuff there. So yeah,
You probably had experience with doing placements in, so if you've done small microcap placements, if you end up having a large parcel on a huge number of investors that you need to trade out, especially when you're doing spread,
yeah,
you can almost control how the chart is drawn because you've got so much of the sell side that you can dictate where the price steps are. It's kind of funny when you've been on the other side of that.
make sure the stock's got plenty of cash. Have to see how you're trying to get in the cap raise either. So, thought I'd bring up the beast just because I'm sure someone will probably ask about it. But
Oh yeah, spot on. They have
yeah,
this.
this, I mean, look, stock still. I think I mentioned there last time there. That looked like could have been a bit of an overbalance there, being the last correction. But the fact that it held the one thing we know is that they can just keep holding the high lows consecutively, and they can go to new highs there. So, thought this was more than likely going to go to a new high here. So look, now looking extended again, but still holding that 10. So, if you're still long here, you'd probably be, just tightening up there. It's a long way back here, but you'll sort of see how, they do each day they catch up. The trick is you got to move your stop up each day because that moving average will probably up 10 or 20 cents every day. So, but that's good, So they'll have a pause and then they'll sort of hopefully they won't have a V-shaped top. They'll sort of congest and then go again, or they'll congest and then roll off. So you often sort of see that congestion there. So they see the moving average will catch up. So the more it catches up, the higher your higher your sort of last sort of stop will sort of work there. So that's the key there. I think in the past there, Chris, I would often sort of panic out. Like I'd sort of see a big move like that, or I don't want to give up gains, So, but yeah, if you can sort of hold, if you've sold some in the heat, and then maybe you sold some at say 5 or 8 times your risk assignment, then try and hold the last parcel. It's a good actually exercise to get into. Like if you can sort of hold some of it, just because it will sort of like half, not half the time, maybe like 30-40% of the time, it'll go much further than you think. Whereas, when you're looking at here on this day here, you probably think, oh, that's it. Like, draw a trend line across here. Looks like it's over, it's extended. It's on the daily chart. It always looks, well, it's, so your brain will just see it on the chart going, oh, it's way too high. I've got to sell it. But if you bring that sort of rule in there to sort of try and get you to hold some, even if it's a small parcel there, it's a good exercise there because then you can kind of see that, oh, gee, this thing went like another 5 days, another 8 days with, for a peep. And that can be, 10, 20, 50% sometimes extra. So that moves the needle if you've got a parcel on there. So, so let the market try and, if you can get into, take some off with heat, take some off on a big multiple, and then try and hang on to the rest with a moving average stop out there. It'll give you it's a function of actually keeping you in longer. And you'll be surprised how much longer you'll stay in. You'll stay in a lot longer than you think on for a lot of names. So,
Definitely. The amount of push leaders.
Yeah, that's pretty much. I think I have one ADG or something there. Just I know it's too small. Yeah.
So there are a few members' requests still in here. 4DX is probably the one. Yeah.
Yeah, I was gonna. Can you actually pick up this one? Yeah, look, it's nice. I know Charles was talking about this one. I know it was on Charles' radar, so hopefully hopefully he was watching this and saw it. Yeah, I did hear him talking about it. Hopefully it's holding coming back to the. I know he didn't like this one here, but he was hoping for it to come back here and hold here. So yeah, it did look quite good. Didn't really give a. To me, I like to sort of go through some sort of like a lower high there. So it would have been whether that was like a little high on the daily. I mean, I will sometimes track down into the half hourly there just to sort of try and find a lower B wave there. So coming through there, but yeah, you probably, be looking at sort of something like that, up here. So still coming in a bit late, but yeah, it still looks all right there. Still hanging on pretty tight there. Just, I noticed it came back to the 10 the other day, but there wasn't particularly heavy volume. And again, it's trying to bounce there, pretty light volume as well. Just whether we've had that 1, 2, 3 drives. Can we get a fourth drive? Can we get a bit further? Possibly. Nothing, hasn't broken the 10 here yet. So considering the momentum there, it has held the 20 there. So you probably want to keep your parcel back here. Yeah, I quite liked the interviews there with Charles. They like sort of just different traders will give themselves a bit more room, things like that. So I normally can choke the trade a little bit, but I like to keep it pretty tight as well. So my style is a bit tighter. That's interesting to sort of see other people sort of give themselves a bit more room there.
Yeah, well, it's been a phenomenal trade, that one. And the next fall on the momentum, the members' requests from the momentum list, they're all solid rallies. So I'm thinking high tight flag or potential high tight flag with all of these. Start off with TMB.
TMB?
B for Bravo.
Oh, TMB on number one. Okay. Yeah, just a bit too small for me. Yeah, not bad. He probably just needs to sort of tighten up, go a bit more sideways there. But yeah, you've had some good volume there.
I like how the volume's dropping off into this consolidation in the right direction.
Yeah, I mean, it's sort of like it's had a bit of a sell-off there. The second day, we'd love to have seen that be a bit lighter rather than heavier. But yeah, but that's okay. You just probably might need a bit more time there. It's funny how when they look early like this, you're sort of like, you're chomping at the bit. But you realize that if you just allow the moving averages to catch up, they generally do catch up, and they will sort of sit and hold around there. So just be patient with this one there. If it does congest here and sort of square off there, but we'll just you just want to see that sort of more of a tightening pattern there, hold there. But yeah, I'll probably be watching it, yeah.
Sierra Papa Delta SPD.
Yeah. Yeah, it's just
So I can see an explosive move, 60 cents to 120. For me, that becomes high tide flag possible. That flag, it didn't really congest for very long, and you're talking about the moving average catch up. It only let the 10-day catch up, and then it got loading again. But it's super liquid.
yeah, they've had a nice run out of here. The whole thing did tighten. I mean, that's that sort of show of strength there. I guess, you do have your little cup and handle there. I've sort of, yeah, I do. I've actually traded a few. I must be getting better at cup and handles things. I've traded a couple of successful cup and handles here recently. But I was waiting for them to have that little 3-wave pullback and the volume to be kind of light and just not to rush it as well. Sometimes when you can kind of, it's like when you first learn Elliot wave, you think you've seen a 3-wave in 3 clicks. Pretty young. Yeah, you need more. You give it more time. It needs more time. That's the one thing with experience there is that you realize these pullbacks and consolidations, they often need a bit more time there. So, but nice little handle there. Yeah.
As the name suggests, Southern Palladium, that palladium and platinum has been running fairly hot. So
Yeah. I mean, like I know sort of, some people talk about this, like in Elliot wave terms there, if you measure that leg, so what's that, 20 cents up to 70, so that's a 50-cent move. So the next wave there, I think the Elliot wave sort of talks about 1.6 times the other side would be sort of where you'd sort of see those moves. So you're looking for at least a 50-cent move again, but more than likely it's going to be like 1.6 would be the mean. So sometimes they can go between 1.6 and 2.6 times. So you're looking at maybe 2 times that as an average or something like that. So if you're projecting off that, say 50, 57, 58 cent low there, you're thinking, okay, the first leg's 50 cents. Some people think, it's going to go 50 cents, but Elliot Way says, no, should go a bit further. It should go, so 50 and, 1.5 times to say 2.5 times. So you're looking at, say, 75 cents to $1.25. So, so we see here, this has gone from 258 up to 145 there. So it's gone sort of 80 plus cents there. So it's definitely gone over that 1.6 times. So that's a good measurement rule to look at there. So I think oftentimes, you can kind of just trying to hold them for the 1-for-1. I think it underdoes them. I think if you give yourself a bit more room there, at least at 1.6 times, I think that's a good measurement rule to work on.
That's a good insight. Another one that's had a strong rally, TMG, so Trig Minerals, Tango Mike Golf. Tango Mike Golf, yeah.
MG?
Yeah, MG.
Yeah, it was a little bit small for me, but yeah, a nice little setup there. Did tighten up there and then break through. One thing I was there with all those names there, Chris, is the same thing with that HAS. If you just waited for the 52-week break, that's kind of the
good trigger. Good entry.
Yeah, that's the trigger. Because sometimes they're not as yes, it's the small ones aren't that clean. The VCPs or the cup and handles, they can be quite messy and stuff there. But breaking to a 52-week high, those sort of smaller names, particularly if the small caps are pretty hot, that's normally a pretty good trigger, particularly if you've got top volume as well. So, yeah.
Last one, BM8, Bravo Mike 8. Is battery minerals. We've talked about a bit before.
Yeah, big move here. I think I just sort of had this one here just to watch. Yeah, so it's come out of the gate here pretty hard and then kicked on. So, there's our 12-month high there. I don't know how 2 years, but nice. Yeah, it's not nice and round here. Nice little cup and handle in here. I guess you could sort of argue it's like a lower handle, but yeah. You probably just want to watch this one for some sort of consolidation. And now that's popped up, shows strength like this. You want to see them sort of cool off here.
Okay, now I know we're about to get busy on the launch pad because you said there are a lot of VCPs that you found, and from the members' requests, they are probably on the same camp because there are a lot of requests in it, and a lot of double ups too. When you're looking through that list, like this time of the week, we really like to see, well, is there a thematic that's lining up? Now, the signal strength that the members have access to tells us we're still leaning into the momentum leaders, but are you identifying any thematics that are raising their hand in this list?
Well, I think definitely seeing a few lithium names, sort of rare earth names sort of coming through there. It's funny, I was actually listening to a podcast there last week, Chris, and it was just a guy who turned like 30K into 10 million. And the first, he did over 5 years or something. It was pretty impressive. But the first sort of year or two of his trading to sort of get his account from sort of small into sort of medium sort of size, he was just doing something called the Sympathy trade. So he was, if there was some news about a stock or a sector, and he thought, that might have an effect on the whole group, he would buy the sister, So we're seeing here, obviously, we're seeing the US government take a stake in some of these rare earth companies. So based on his Sympathy play there, if you're looking for, say, anything that's got a US-based lithium player, so you'd be basically just buying, and that was how his first few years, that was his trade, was the Sympathy trade. I thought it was a good analogy there. Good. We talk about, the sector being strong, like, Sam Weinstein, and then buying the relative strength, and then buying the sister companies based on the stocks that are showing relative strength as well. So it was just sort of following sort of news that he thought was going to impact the sector. But instead of buying the company with, like the EP, he would buy the Sympathy floats.
So I find that fascinating because I've been skeptical to do a video about this because it seems so conspiracy theory. But you're mentioning rare earth elements, you're mentioning lithium, those ones. What I'd noticed, and you're talking about those news events, do you remember how China then started pulling the licenses on lithium and the lithium price shot up? And then a couple of weeks later, it sort of, oh no, actually that license, that mine's coming back online years before expectations. What happened is that those thematics showed up on the launchpad. So this kind of list here, and I monitor them each week, and they showed up. And what I found was that they weren't shooting the lights out, but there were a lot of smaller micro caps in that Sympathy trade. Now, in hindsight, that's where we look for those other thematics. That's why we have 380, because we try and find that cross section. They had an interesting increase in volume and trade, and that's what the launchpad identifies. It's when a whole set of companies start having a bit of a price floor show up. So I'll have a look into that Sympathy trades because it fits in with the thesis that, think about it from insider trading. If you know, and you work for the Pentagon, you know that you're about to drop 400 million in MP minerals and open up rare earth elements. It's insider trading if you buy MP. That's insider trading. But if you buy the tenement next door or the 5 ASX listed companies that have tenements in the same state, that's not insider trading.
Just fellow blows his account.
Yeah, exactly. So I'm not being conspiracy theorist, but it's been showing up, particularly in these minerals that then have massive announcements from US government spending or China responses, China geopolitical supply chain constraint responses. It's showing up on the ASX where you have companies that have similar tenements. Just then they've got a price floor in them and their volume's increased, and there are other companies in the same supply chain that aren't moving. Anyway, I'm going to look into that. So over to your launch pad. I'll let you lead and we'll cross off the list until we've got the members' request left over.
Your number one's a great setup here, Chris, because that sort of had that spike, show of strength, a bit of volume. Then the whole thing's tightened up here. And then we're just starting to come through the B wave there and the volume's big. So the only negative is there is a bit of overhead. So the stock does have a bit of overhead here. So we know when it does finish, it might come back a bit more. But that's a good setup here so far. Good volume profile as well. So that can, if I saw that sort of setup with that overhead, I'd probably be less excited until I saw this volume here. Those last 4 volume bars have actually got some momentum there. So that's a good sign there for that one. TCG, another VCP in there, sort of tightened up, but it sort of had a pretty strong run. Whole thing sort of tightened up, just trying to break through here. It's a little bit choppy, but doesn't look too bad there when we sort of zoom out. Just has had a pretty strong run, but so far, the good thing is that the corrections are uniform. That's probably around the same size as this last correction. So that's sort of something I know McLaren used to sort of say, that the corrections are uniform around the same size, and it means it can sort of keep going here. So that still looks all right here, PCG. So 88 had a bit of a rally out of the low. So that's been a bit of a laggard here. So less enthused coming out of that low, but definitely we'll watch this and see if we get any sort of consolidation later on. I already knew there. We spoke about this one previously. I'd have come up there. But look at the volume as well. Is that volume, the whole thing's had a bit of a run. Whole thing's tightened up here. Bit of a B wave break, sort of through here. But the volume is really, that's sort of standing out there. A bit too small for me. Just got to watch that overhead. But chart not too bad here, but small caps are on fire. Did see this L1G. To me, I mean, show of strength, pretty strong there. It's gone above a couple of swing highs. That's pretty strong. Pull back here. So first leg, second leg, third leg. So really, you got a VCP in it, Chris. That's the first correction. Second correction, smaller. Third correction. So even though it's gone, rather than go square, we can prefer to sort of see those square ones there. And it does come under the 50, but by the time it actually breaks the V wave, it is back above the 50. So breaking back above 72.5 cents would have been a bit of a trigger for me. And that when there was not bad volume on that day as well. And there was some reasonable volume coming off that low. And the next couple of days was pretty light volume. So I thought, it looked pretty interesting. The sector was just starting to get legs there. So again, there's that sympathy play. The sector there, and it's popped there. So we're seeing a few names there. AVR. I thought it was okay here. Just sort of, like it's kind of, it's actually got that little 0, 1, 2, 3 there, and then that cylinder, sort of the sort of 0, 1, 2, 3 sort of cylinder, and then it's sort of come back here. So, still basically sat on top of that previous high. So still in a pretty strong position there. So this potentially could still go higher again. So, but that's probably a little larger than you'd like to see, but has held the 50. It's okay, not awesome. You'd like to sort of see it squarer there. EBR, I did see this one actually, but it was under the 50-day moving average, Chris. I just sort of thought, that there was a bit of a VCP in here, hopping, sort of tightening up. But it didn't really make it for me. There was another code very similar to this, EBR, EGR, and this was a better looking VCP. The whole thing.
It's just keeps climbing. That's like perfect, like ascending triangle.
Just tightened up here. It's funny there. I watched this one for a while here. So it's because it's under 50 cents, doesn't really meet our criteria, but it's been interesting watching the whole price action. Because I was watching both those stocks, the EVR and the EGR, because once I added to my watch list, they were coming up one after each other. But that looked all right. S32, pretty interesting there, because again, this actually had a 0, 1, 2, 3, Chris, and it had a really good 0, 1, 2, 3 previously in here, and I had a good one prior here as well. So this stock's got some history of setting up, a low here, first higher low, second higher low, third higher low, and then you're just waiting for a range break, and then it's off, and then hasn't looked back. So the volume's actually expanded here. So it's not a bad something. These sort of little 0, 1, 2, 3s, when they come in nice and tight here like this, they're worth having a look at there. So there's at 0, 1, 2, you pull back into here, and then you range break that range. It's not a bad little setup there. So, I thought that was all right. KAL, Kalgoorlie, nice, not a bad setup here. I mean, you would love to have seen this stay in the top half. It's probably come back to the 2/3, so it makes it just slightly less appealing. But the whole thing is tightened up here now. It's now starting to break through. Just too small for me, but show of strength and a consolidation. I mean, no, sometimes these can go for 3, 5, 8 months. So we're in that window there. So not bad. So I would love to see it. Would have been better to stay in the top half. The more powerful ones tend to stay in the top half. But in this market, Chris, where the stocks that are under the 50, they're still doing well. The stocks that are coming back a little bit deeper than normal are still doing pretty well. So not saying lower your standards. I'm just saying the market is
open to more possibilities.
So it is hot. So a few more exceptions are definitely floating in there. The Webjet was pretty interesting there. Definitely had that bit of a news update here on the day. It was almost like an episodic pivot, but then sort of because it's had so much negativity there, it's sort of like it gets drawn by the end of the day. So but I actually thought this might actually climb here. So it has actually climbed that since. So I didn't appear bad there. I think I was actually thinking GYG might do sort of something similar. But then yesterday it closed below that low. And I came back in gap filled. I thought, okay, gap fill maybe then shows some strength late. It actually just showed weakness and then it's still a massive multiple. And I think even though it's had a good number, I think it was actually below their expectations. Yeah. So I think what they were hoping to achieve, I think. So they've come up a little, even though it's good result, it's still come up a little bit short there. And the only other one that I did see, Chris, was WA1, which is sort of one that I've traded a few times before. I don't know. I missed this VCP here. I saw it a few days later. But let's pull that nice and tight here. The trend's held. The whole thing's tightened up in here. I mean, the sector's on fire. I mean, yeah, nice little break here. Could have bought that at $19, just above $19 there. Coming out here already, even a bit fails there. From my experience, this one here will tend to run a couple bucks and get you to, get to sell half or a third at 2.5, 3 times risk, and then get the rest of break even at least. So yeah, but she's a pretty hot market. That is it. Any other ones?
There are still quite a few. When you're at the bottom end of the list, there was number 30, AXE Archer Minerals. AXE was one of the requests.
Yeah, I did see this one there. Yeah. Considering how hot the market is, just not showing that strength, is it really? So it's not jumping out. There's so many stocks jumping out here showing strength, but
well, signal strength tells us to be leaning to get momentum leaders.
Yeah, like I mean, it's hard because like a lot of them are running here, so you're looking to sort of try and maybe go somewhere else. But gee, I mean, if you come into the laggards there late and then it stops, then that's the trouble, So I think if you're, that sympathy play or playing the sisters is good, but then you don't want to be playing the laggards either. So, the leader pops and stuff there. And I mean, the leader will probably end up having the biggest move. That's just the way it goes. And if you miss the leader and you want to play this, the second, third, play that's fine there. I think once you start getting down to 8, 9, 10, 20, 30 at the group, no, so that's where you're going to get in trouble if you start playing that group too long. So,
there have been very rare occasions where it has, but definitely not 20th. I mean, we've pulled apart the uranium plays and the lithium plays on the ASX. You can have 12 or 15 of them running hard and hot and give good quality signal setups. But once you get and that can be over 3 or 4 months where they're breaking out. So they're not all running at the same time. By the time the 15th one is breaking out and has a good quality VCP, the leader who started running 3, 4 months earlier has done what you were describing earlier. They've already had a rally. They've had a high consolidation. They've had a second rally, another consolidation, probably gone for their third. So if you look at deploying capital, am I better off trading a clean VCP being the 15th company in the thematic to run? Or am I better off getting 3 strong pulses and trading just a second and third pulse in the leader? And kind of what you said before.
Yeah.
The probabilities.
I think you'll know the answer to that. You're better off going back to the leaders and waiting for them to congest and then come back to that 10 or that 20-day moving average and then try and rebuild, wait for some sort of consolidation, wait for that price action to tighten up, wait for volume to, to drop.
If anyone wants proof, I guess they can just study Kalamagi, right? So, but we've got many more. Sorry. So brain chip, that's one that has been.
It's like up the other day, but it's weird, man. When I see this running, I feel like, this is like been, it it's over promised and under delivered for the last few years.
Yeah.
And it's tended to run late. So it's tended to come to the party at the very last moment. So if it's running, that should be that's a red light flashing for me. So that we could be coming to the very end of this heap. So yeah.
Okay, so that's a good insight. No more. LAS is the next one on the request list. So League of Energy. Yeah.
The price action shows a lot more strength and then it consolidates and, never say never come back there, but it's just a bit of a warning sign to me. That's been a bit of a laggard there. Hasn't really got any traction so far. LIS, is it?
Yes. Yeah, LIS.
Yeah, a bit small, but not a bad price action there. Had a bit of a run, consolidation, bit of a VCP, bit of a break. Just too small for me personally.
Yeah.
Okay, chart.
KNB, which Coonaberry Gold.
KNB.
Yeah.
Yeah. So again, this is a gold stock here, and gold's at 4,000, and this is not at new highs here. I'm not even making lower highs. That's probably a bit of a concern. Yeah.
I mean, on single resource.
Yeah. So I mean, you already start to see golds are all, gutting the gap down here. The one thing we know with some of these names, Chris, is that you go back and study gold, it doesn't consolidate at tops. Like it run into it, and on V-shaped. I mean, the kind of V-shaped lows as well, but like they're big moves up and down here. They're very V-shaped tops and bottoms there. I don't hang around. So like 10 years as well. Look at those tops. Like that. That's
There's not much time to get out. If you're
There's no consolidation on those stockies. So you run with the bulls there, but like, these things when they're done, they come off here. So yeah. So I mean, there's a little overlapping top here. We're just So I'd just be concerned here with that price action. Yeah, just having studied gold stuff over the years, just notice when they peel off there, it's a bit of concern. And should be a little bit nervous about the fact it has hit kind of a bit of a psychological number as well. So we know in the past, where they maybe 2.5 or 2,000 or 3,000 was, it can be levels just to sort of keep an eye on there. So that is magic move. So there's the 2,000 move. So we've almost doubled sort of from that, around that 2,000, sort of kept it at bay for quite a while. 2,000 back to 1,600 here, and then now we're at 4,000. So yeah, looking but those stocks, they're just those stocks have got a mind of their own. They're a bit like tech stocks there, where they tend to go up, straight back down again. So definitely fall into the 50-80 kind of category for me.
Yes. Next one on the request, IMU Imaging.
Yeah, notice this sort of had a bit of a rally there. Volume's still a bit tepid there. Nothing really getting, and yeah, still plenty of overhead here. So yeah, not for me. So yeah, all that.
Neo. Oh yeah, right. Long history.
You fight the tape there. Yeah.
Neo Metals NMT, November Mike Tango.
NMT.
Yeah.
Yeah. Again, sort of not really.
So we've got momentum leaders. We've got the small caps at massive all-time highs, and we've got huge abundance of opportunities. This is only just crossed 50, and it's not at a 3-month high.
Yeah. Yeah. You could do be careful of laggards there. Sort of just, I know it's still come in there. Sort of, you will get an occasional laggard who can do something there, but the risks are pretty high. This market is papering over a lot of classic, trading conditions that normally would occur. So it's making things look a little bit easier than normal. Whereas, so if you start relaxing here on your rules and your process, just because the market's so hot here, the next sort of time here, you're going to be loosening and the market's not as tight. Then you just won't have, you're going to make a lot more mistakes here. So I think it's important to sort of the process there, stick with that process there, and don't, it's easier to lower your stance. I mean, there's a classic reason why they say that your worst trade usually follows your best trade, because then you start to let guard down a little bit, start to let a little bit of complacency creep in, and so I know it's sort of, there's a little bit of FOMO out there. We've seen some stuff run a bit hot here and think, oh, should have put my eye on that, but it's more important to sort of have a good process and stick with it. And then there's plenty of trades. So I've missed plenty of trades here. I've every second day I'm like, oh, geez, so that I felt like I've missed a lot of trades here, but the trades I've taken, I've traded well. I've traded my process, and then that's all you can do. So you just have comfort in going back and saying, okay, all I've done is I've missed a few trades there, and that's probably whether that's execution or whether that's you've got busy doing other things in missed stuff. It's when if you're not seeing the trades, you're not scanning them, or they're not coming up on your list, or you're not getting Chris's list, and you're overlooking these trades, then that's a concern. That's what definitely got to fix that. But if it's just that you sort of don't have enough capital, or or another reason, that so that's all. But the key thing is to sort of see the setups. The second thing is make sure they tick all the boxes, and then the third thing, make sure you're following the process as well. Just got to be careful that this market is we're in a rare period where we just sort of showed there that's like 96% above any other. That's the hottest market for a long, long, long time. So just got to be careful. Yeah, that's like, this is when everyone puts their guard down and starts to reduce. The FOMO makes you, want to do something stupid. So this is when people blow themselves up here and start making mistakes. They stop using stocks because, oh, mate, the last 4 trades I've had, they've all gone.
Yeah.
40%.
8 times.
Yeah, I'm not going to worry about the stop this time.
No.
So yeah, and I might double the size. Just I'm on a winning streak. I can't go right as touch. Yeah. So like that's human nature to start thinking that way. Do not fall into that trap. Just keep your process tight. Do not do not lower your guard here. If anything, if you've had 3 or 4 winners in a row, that should tell you to up your guidance on, make sure you're actually, taking extra care with your positions, and also with the position management too, Chris, as well. That's probably the one thing which kind of does tend to go a little bit when you've had a nice period like this, is that normally you got your process there, and maybe you're guiding stocks up with the moving averages, but then you're like, oh man, this thing's going to run for another 10, 20%. I'll jump that. I'll move that moving average up in a couple of days' time. I can't going to come back there.
But everything I trade wins.
Yeah. So just keep the same process going, keep following, keep good habits there. It's just, understand that human nature is going to try and work against you right now when the conditions are really like this. So then FOMO is going to kick in, and then complacency is going to kick in, and then you're going to relax yourself. So just do not do that. That's what the human psyche wants you to do, but you must sort of, must fight your own inner feelings there and just follow the process of trading, and try and stay humble too. I think once you get a few good runs and stuff there, and you start telling yourself you're pretty good, you're just about ready to get a slap. So do not fall into the trap of telling yourself you're too good. So you will get slapped pretty hard if you do that as well. So stay humble, complacent, not complacent, but just stay sort of, make sure you manage your risk and just stay really diligent here right now.
I like that. Taking a winning streak is an opportunity and an alarm bell to double down on position management and sticking to your rules, not to get lax, to do the opposite. Strickland Metals, STK. So if we load that one up, that's another request. Sierra Tango Kilo, Strickland Metals.
Yeah, just a bit small. He had a bit of a gap up, so hard to small one. It's just no. So there's no real good setups in there. The whole one. You could argue maybe there was a little bit of a VCP in here, 52-week break, but yeah, some healthy volume maybe. But even that, it's coming back up. So it's much harder to trade those smaller names.
I'm looking at that and struggling. I know we have members who really kill it in this space, but like Gary, I'm looking at that chart going, I can't see my edge shining here. Another one in the request is EQR, being EQ Resources, EQR, Echo Quebec Romeo.
EQR, yeah, just a little bit. Looks okay, the last price action there, but it's another really small player. I can see here it's got a history of sort of jumping up, pulling back, jumping up, pulling back. So it is still trending down here. So the volume's a little bit more elevated, but yeah, it's not the easiest one to trade here. Not very clean here. So pretty risky for mine.
I'll say on that one, just looking at that volume and that sort of price action, this is the kind of thing that shows up on the launch pad before an MP Minerals kind of thing. If you see a whole lot of companies in the same space doing that kind of thing, I'm not saying it's always going to be a US announcement of opening up their wallet, but that's kind of where corporate action can show its face before the news announcement. PLY is the next one. Playside Studios, Papa Yankee.
Yeah, I did see this yesterday. Pop up there, but yeah, it's been struggling the stock here. Yeah. It's funny, I tipped this stock actually a couple of years ago on Ausbiz as one of the big movers there. I think I ended up being the biggest mover for the year. Just because it's sort of in the early days, it was pretty tightly held. There wasn't much in the register there, and it was sort of, it was one of the first sort of companies that making games and stuff there. So yeah, it had a really good run there initially. I think it went from like 23 cents to about $1.40. But the whole thing's imploded since then. It just hasn't really sort of got traction there. It's got a bit wary and cutbacks, and yeah, just haven't really have really got it together. So yeah, I would avoid that one strongly.
And last one, Novonix, NVX. It's been an old player with a good momentum history, but you're going to see a bit of history behind it.
Yeah. Like it's a tough one. I did see this VCP in here, Chris. I did obviously the sector's moving. Just wasn't probably the one that jumped out at me in the sector just because of the overhead. Just because that's a lot of overhead.
It's a lot of history.
Yeah. But it is US based. And that's where it's all happening at the moment. So no surprise to sort of see, you could potentially traded that EP there. But yeah, there are probably other stocks that might have been better, but take a good run here. Just the problem with this is like as I said, these sort of stocks can run here, but you'll find that when they do turn, the pullbacks are a lot sharper. They don't tend to I just don't tend to consolidate, I just tend to sort of attract selling here. And that's only just because investor psychology tells us that, the last 2 years, most people have bought it are underwater. The last 5 years, most people have bought it extremely underwater. So anytime it rallies here, it's just going to be so many sort of buyers in the past there are looking to just try and, there'll be bucket loads of brokers here. Like we'll put, if it just gets back to $2 or back to $1.50 or back to $1 or back to $1.25, we'll just get, we'll try and sell it into some strength. So they'll just be overhead there for a while. It just needs a few more years of trading down here to kind of wash all these buyers in that from 21 and 22. Yeah, it needs a couple of years to wash them out. I reckon at least 3 years to wash them out. So we're almost there, but just a bit of overhead there. But they can come through.
Yeah. Well, that's the request, and there's a bit of volume on that, but as you said, there's
yeah, it's good. I mean, there's 2.5 years there, so you're sort of getting to that. I reckon it needs 3 years of having that really negative price action to pass before they can kind of get going again. So yeah, so it doesn't look too bad here. Just the thing I just don't like about them is that they tend to sort of shoot up. But I think CHN is kind of the same, tends to sort of have that run, but we'll just pull back every time as well. So it's been pretty strong. But every time it sort of it stalls, it will tend to get a bit of a whack. So yeah. Whereas what's not a Luke, I mean LYC is just look how tight those consolidations are. It rallies, tight consolidation, rallies, tight. It's on new ground. There's no one's bought it up here. So it's a difference. It's investor psychology.
We're all winning together as opposed to we're all begrudging in shareholders. I do not want the annual general meeting posted to me. I am pissed off I hold this. So they're really good insights. Thank you. And for those who are watching still now, hopefully you remember and you've got access to the charts so that when you're watching this video, you can have your marked up charts before you watch it and sort of compare it. It's always hard if you've got a stock of interest that Gary talks about and you suddenly latch onto that. It's hard to then go back with your own fresh eyes and have that analysis. So take the opportunity, click join, get the list, send through your requests and learn. And this is what the best traders have done. This is what Gary's done. I've done it for years. Every trader we know who trades well has done exactly this, studied the leaders and looked for where their setups are. So, Gary, any final words for this week?
No, just keep your guard up, keep your process tight, and hopefully, the market, will keep bearing some fruit here. But just we've had an incredible period, so at some stage there, we're gonna have to bank that, and just remember, cash is a position. Okay, so for professional traders and stuff, there, it's okay to hold cash when there's no setups here. So don't start taking B and C type trades here. Keep to your guns. Only this is the period here where we want to be taking A plus only. So this is we're running pretty hot here. We can this is what where we can get in trouble here. So just keep it tight, keep it A plus.
That's a good insight. Thank you very much, Gary Glover from Novus Capital.